Welcome and thank you for standing by for today's conference. All participants will be in listen-only mode until the question-and-answer session. At that time, to ask a question, please press star 1. Today's conference is being recorded. If you have any objections, you may disconnect at this time. I would now like to turn the call over to Tanya McGinnis. Thank you, and you may begin.
Thank you. Good afternoon, everyone, and welcome to the fiscal year 2021 Small Dollar Loan Program Application Webinar. Again, my name is Tanya McGinnis. I am the Program Manager for Depository Institutions Initiatives, which is a business unit within the CDFI Fund that manages the Small Dollar Loan Program. As a reminder, participants will be muted until we open the phone lines for questions at the end of the presentation. Our agenda for this webinar includes the following: an introduction of the Small Dollar Loan Program staff, an overview of the CDFI Fund, an overview of the Small Dollar Loan Program, the Small Dollar Loan Program application logistics, as well as the program application overview, some important reminders to share with you, contact information, and then we will proceed with the questions. Those of you who participated in the pre-application webinar about a month ago will recall that I said that our business unit has a staff of 2. Well, we've grown since then, as you can see, and so I'm glad to present to you Julie Sandler, who is, she's new to the team. She joined us about 2 weeks ago, and we're excited to have her on our team. Julie is the Senior Management and Program Analyst. Joan Reed-Patrick, who you will hear from in a few minutes, is our Policy and Program Officer, and Bridget Ware is on a part-time detail with us, working with us on this program. So the CDFI Fund's mission is to expand economic opportunity for underserved people and communities by supporting the growth and capacity of a national network of community development lenders, investors, and financial service providers. We accomplish our mission through the programs listed on the next slide. Joan, if you can go to the next slide, please. And I'm sure many of you all are aware of these programs: the Bank Enterprise Award Program, the CDFI program, the NACA program, the New Markets Tax Credit Program, the Capital Magnet Fund, the Bond Guarantee Program, and then our newest program, the Small Dollar Loan Program, which we are going to discuss further in this presentation. In addition, the CDFI Fund co-manages the CDFI Economic Mobility Corps with AmeriCorps, which is authorized by the Consolidated Appropriations Act of 2020. As stated previously, the Small Dollar Loan Program is the newest program. It was authorized by the Dodd-Frank Wall Street Reform and Consumer Protection Act of 2010. Up to $13.5 million will be available for this funding round. The program was created to help certified CDFIs address the issue of expanding consumer access to mainstream financial institutions and provide alternatives to high-cost small dollar loans, and to also help unbanked and the underbanked populations build credit, access affordable capital, and allow greater access into the mainstream financial system. Per the Small Dollar Loan Program statute, Small Dollar Loan Program grants may be used only to support the creation of a new small dollar loan program or an existing small dollar loan program that offers loans to consumers that are made in amounts that do not exceed $2,500, must be repaid in installments, have no prepayment penalty, and have payments that are reported to at least one of the credit reporting agencies. Per the Small Dollar Loan Program statute, there are 2 eligible uses of awards. The awards may be used for loan loss reserves to defray the cost of starting a new small dollar loan program, or expanding an existing small dollar loan program, or for technical assistance for technology, staff support, and other costs associated with establishing a new small dollar loan program or expanding an existing small dollar loan program. Please note that our grants cannot be used to provide direct loans to consumers. The award amounts are as noted here. So for a TA award, the range is from $10,000 to $150,000. And if you're interested in a loan loss reserve award, the amount is going to be determined based on your projected small dollar lending over a 3-year period. And the range is $20,000 up to 20% of the applicant's, again, projected 3-year small dollar loans to be closed over a 3-year period, not to exceed $350,000. The small dollar loan program statute allows for 3 types of eligible applicants: certified CDFIs applying individually, or partnerships between a certified CDFI and any federally insured depository institution, what we have termed as a FIDI, with a primary mission to serve targeted investment areas. And the third eligible type is partnerships between 2 or more certified CDFIs. The statute further describes how applicants can use the eligible awards. So for loan loss reserve grants, eligible CDFI, certified CDFIs applying individually are eligible, or a partnership between a certified CDFI and a FIDI, again, are eligible to apply for the loan loss reserve awards. For the TA grant, again, a certified CDFI applying individually or partnership between 2 or more certified CDFIs are eligible for the TA grant. And then those that are interested in applying for both a loan loss reserve grant as well as a TA grant, only certified CDFIs applying individually are eligible. The small dollar loan program may not be used for small dollar loan programs or products with any of the following lending practices and loan characteristics. And this list here is further defined in the NOFA, so I strongly encourage you to review the NOFA, where you can again see the description of these practices and characteristics that our awards will not support. And they include high-rate loans, coerced automatic loan repayments, excessive refinancing, automatic loan insurance or credit card add-ons, security interest in household goods, vehicles, or deposit accounts. There is an exception, and that includes loans with a savings account component or credit builder loans. Again, we will not support lending practices and loan characteristics that have excessive late fees on missed loan payments, abusive overdraft practices, aggressive debt collection practices, or forced arbitration clause and class action ban. The CDFI fund will prioritize funding for applicants that propose to offer small dollar loan programs that include any of the following characteristics. And again, this is also listed in the NOFA. And that is, again, programs that offer small dollar loan terms that are at least 90 days, use ability to repay underwriting criteria that considers the borrower's ability to repay their loan based on both their income and expenses, that make loan decisions within 1 business day after receipt of all required documents, offer a reduction in the borrower's loan rate if the borrower elects to use automatic debt payments, programs that offer automatic savings features that are built into the regularly scheduled payments on a loan, and then those programs that offer access to financial education and credit counseling. The CD5 Fund will evaluate applications based on the following criteria. We will use the application assessment tool, and those of you who have applied for a CD5 program, FA or TA award, are familiar with this analysis. It looks at the financial data that the applicant provides in their application, and it application also asks a series of compliance questions. We will also review the applicant's business strategy and their community impact strategy on for their plans for the award. And in this section, we'll ask questions related to community analysis and financing gaps related to small dollar lending, proposed use of award, the proposed affordable and responsible loan characteristics and lending practices of your programs and your products, your track record, your growth, and your projections. Applicants will receive a low risk, a medium risk, or high risk score based on our review, and applicants that receive a rating of high risk will not receive further consideration for an award. Award sizes will be based on the following. We'll conduct our due diligence review, which will include a review of the management team and key staff, a history of performance in managing federal awards, an audit and regulator findings. We will also look at your requested amount. We'll look at your projected lending over a 3-year period. We'll also look at your the lending practices and loan characteristics, as I stated a couple of slides ago. And we will also, applicants that have headquarters that are located in persistent poverty counties, we'll consider those as well. Our program is not, our program, like the other CD5 Fund programs, are subject to the statutory 10% PPC requirement, but award sizes will be adjusted if needed to award funds to applicants located in PPCs. And then we will also, and award sizes will also be based on the applicant's risk rating level. After award decisions are made and you are selected for an award, you will enter it into an assistance agreement and you'll receive your payment, and each award will have a 3-year period of performance. The assistance agreement identifies the terms and conditions of your award, including but not limited to the amount of the award, the approved uses of the award, the performance goals and measures. So, for example, your projected small dollars lending over the 3-year period, and the reporting requirements. Again, all of these items will be included in your assistance agreement. I will now turn the presentation over to Joan to walk you through the process to apply for a small dollar loan program award. Joan?
Thank you, Tanya. I'll be presenting information on the 3 systems that are involved in submitting your small dollar loan application for fiscal year 2021, namely SAM.gov, Grants.gov, and EIN. In order to apply for a fiscal year 2021 SDL program award, applicants must have a valid DUNS and EIN number. Therefore, it is recommended that applicants allow sufficient time to obtain this information. Applicants should also ensure that they are registered in SAM.gov and EIN and that their accounts in the systems are updated. So to prepare for the fiscal year 2021 application round, it is recommended that applicants familiarize themselves with the NOFA and other application materials located on the SDL program webpage of the CDFI Fund's website. So applicants should ensure that the information in all the applicable accounts, again, SAM.gov, Grants.gov, and AMIS, are updated with the correct EIN and DUNS number. If the EIN and DUNS number in the applicant's AMIS account do not match the EIN and DUNS number in its SAM.gov account, the CDFI fund will reject the application. And additionally, the EIN and DUNS number should be that of the applicant, and applications submitted with the EIN or DUNS number of a parent or affiliated organization will also be rejected. For applicants that do not currently have an active SAM.gov account, it is recommended that you allow ample time to complete the entire registration and submission process well in advance of the SF-424 submission deadline. Existing users should review their SAM.gov account to ensure the information is up to date. If you're unable to obtain a SAM.gov registration confirmation, you will not be allowed to submit the SF-424. And additionally, if the SF-424 is not successfully submitted and validated by the deadline, the applicant will not be able to submit materials in AMIS, and the application will be deemed ineligible. Therefore, applicants are strongly encouraged to submit the SF-424 as early as possible in the Grants.gov portal, since submission issues may impact the ability to submit the overall application. The CDFI fund does not manage Grants.gov or SAM.gov and is unable to respond to any questions related to these systems. Therefore, questions related to SAM.gov registration or submission should be communicated directly to them, and their contact information can be found on their website. The SF-424 is the only document that is submitted via Grants.gov and must be submitted by the Grants.gov deadline. Note that if the SF-424 is not successfully accepted in Grants.gov by the deadline listed in the NOFA, the CDFI fund will not review any of the materials submitted in AMIS, and the application will be deemed ineligible. If the award amount that is requested on the SF-424 is different from the amount in the applicant's AMIS application, the CDFI fund will only consider the amount requested in the AMIS application. The CDFI fund does not maintain Grants.gov, so applicants must contact Grants.gov directly for assistance in submitting their SF-424. The SF-424 must be submitted under the correct program funding opportunity number. SF-424s that are submitted under the incorrect program funding opportunity number will be deemed ineligible. Each applicant must register their organization in AMIS and submit all supporting and required documentation via AMIS. As a reminder, the SF-424 is the only document that will not be submitted via AMIS. Applicants are required to designate at least one authorized representative and at least one point of contact in AMIS in order to submit their application. The authorized representative must electronically sign the application prior to submission through AMIS. An applicant that fails to properly register and update its AMIS account may miss important communications from the CDFI fund or may fail to submit an application successfully. I will now turn the presentation back over to Tanya to go over the application.
Thank you, Joan. So now let me spend a few minutes just talking about the application and providing an overview of the section. And please note, if you are applying as a partnership, all application questions and data supplied relate only to the designated lead certified CFI of that partnership. And that's stated in the application as well as in the NOFA. So if you have any questions about that, please let us know. So the first set of questions 1 through 5, are the organizational questions. And most of that section will be pre-populated. So I strongly encourage you to review that information, make sure it is correct. And if there are corrections that need to be made, you will need to make that in your org details page so that we are capturing the correct information. Question 6 is the executive summary, and that's where you provide a high-level overview of your strategy for using our award to support your small dollar loan program. Then the application goes into 2 parts, and those parts are you're either providing narrative, you're selecting options from a pick list, or you're completing tables. So part 1 is the business strategy and the community impact section. Question 7 is on community analysis and financing gaps, where you talk about the need in your proposal to address those needs, the small dollar needs. Question 8, which has several subcomponents, is about how you're going to use the award. So are you going to use it for loan loss reserves, technical assistance, or combination of the 2? Question 9, I spoke previously about the prohibited practices that the Small Dollar Loan Program Award will not support. For question 9, we encourage you to identify the lending characteristics of your program that are safe, affordable, safe and affordable, and identify the expected impacts that will result from your program. So this question will give you the opportunity to do that. Question 10 is where you will describe your small dollar loan program, if you currently have one, or if you offer other short-term unsecured loan products. That's where this is where you would describe those programs. Questions 11 and 12 is where you would provide information on the track record of your programs. If you have a small dollar loan program or in other short-term unsecured loan program. And your projections will also be, you provide information on your projections here in the accompanying appendices as well. Question, or part 2 of the application is the organizational capacity section. And so here for question 13, you'll talk about your key personnel. So you should complete this section by providing the key personnel that will be integral in managing the Small Dollars Loan Award, Program Award. For question 14, you'll provide information. Actually, this question will be pre-populated with the applicant's previous CDFI fund awards. Again, please verify that this information is correct. Question 15 is on the financial health of your organization. And we also provided on our website a workbook that provides further guidance on completing this section. And then question 16 is the compliance risk evaluation question. And this is where you'll provide information and where we will evaluate to ensure that there are no compliance or management concerns related to your organization. So again, this is just a high-level overview of the application. So we can go on to the next slide, Joan. So to recap, a complete small dollar loan program application consists of 2 parts. It's the standard form 424, which Joan talked about, and it's submitted through grants.gov. And then the second part is the AMIS application, which I just walked through at a very high level, and that's submitted through AMIS. Some important reminders to share with you. Applicants must submit the required application documents listed in Table 2 of the application. Applicants must use the official application templates provided on grants.gov, as well as the AMIS, AMIS. Applications submitted with alternative or altered templates will not be considered. Applicants are only allowed one small dollar loan program application submission in AMIS. And again, applicants must have a unique EIN assigned by the Internal Revenue Service and a DUNS number, what Joan spoke about a few minutes ago. And just to highlight some key dates for you, the NOFA, as you all know, was released on April 28th. The grants, the 424 in grants.gov is due by 11:59 p.m. Eastern Time, May 28th. The last day to register as a user and update your organization's EIN and DUNS number in AMIS is also due 11:59 Eastern Time on May 28th. The last day to contact the Small Dollar Loan Program team with any questions you may have is June 25th. The last day to reach out to IT for any help on your application is 5 p.m. on June 29th. And then the last day to submit your electronic application in AMIS is 5 p.m. Eastern Time on June 29th. So I know we've shared a lot of information with you in a short period of time. If after digesting this information you have follow-up questions, this page lists how you can contact us. Now please note that this presentation, the recording as well as the PowerPoint will be posted to our website after the webinar for further reference as needed. So that concludes our presentation. Thank you so much for participating in today's webinar. We will now open the line for questions.
Thank you. And at this time, to ask your questions, please press *1. Please unmute your phone and record your name clearly at the prompt. To withdraw your request, please press *2. Once again, please press *1 at this time for any phone questions. One moment, please. Our first question is from Holly. Your line is open.
Hi, Joan and Tanya. I have a question regarding the appendix, tables 2A and 2B regarding your track record. Table 2A on the track record for the small dollar loans asks for historical data from 2016 through 2020. And 2B for the other small dollar loans asks for historical data from 2017 to 2021. So my question is that correct, or were those two tables supposed to be mirror images and both supposed to cover the same historical time frame?
Holly, thanks for your question. It should be the same time frame, so it should be 2016 through 2020.
Okay,
and
that's what I
did. The application. Okay, we'll look at the application and make any necessary corrections.
Okay, and I have one follow-up, Tanya, if I may.
Sure.
Okay, on the same chart, with regard to track record, you asked about the loan loss reserves. Most banks are going to have a loan loss reserve, based upon, those are formula driven based upon historical losses and call codes. So the loan loss reserve is really going to cover all consumer loans if they break it down to consumer lending, not necessarily just $2,500 and under unsecured loans. So I don't know how you want us to address, do we just put zeros there if we can't break it down to the specific criteria of the $2,500 and under small dollar loans?
Yeah, that's a good question because we're focused on a $2,500 loan.
And I just don't know that that's going to be feasible to calculate from the loan loss reserve, historical data. Now, prospectively, they could certainly set up a system to track it, but historically, that data is going to be really hard to retrieve.
I got you. I understand. Do me a favor. Submit a service request with that question, and let us do a little bit more research on that. And then what we'll do is we're going to update our FAQs. And we'll include that in the revised FAQ to give you all additional guidance on how that should be treated.
Okay, appreciate that. Thank you.
Thanks, Holly.
Next question is from Ashley. Your line is open.
Hi, we're an emerging CDFI, and we're looking to partner with the CDFI for the small dollar loan program. I was reading over the FAQs, and in the example one, it states that the local SIDI that states it will refer all small dollar loan candidates to the CDFI. Does that work both ways? If we were to partner with the CDFI, would they actually refer candidates to our small dollar loan program, or is it only just one way?
Yeah, it can. Let me make sure it's clear how the partnership works per the terms of the statute. So if you are a certified CDFI and you want to partner with another certified CDFI, for example, then you would be designated the lead certified CDFI of that partnership and responsible for managing the award. So responsible for either establishing a new small dollar loan program or expanding your existing small dollar loan program. So your partner may provide support to your program in ways that may include providing lending capital to your small dollar loan program, or providing referrals for your small dollar loan program.
And if we're not a CDFI, though, we haven't completed everything yet.
You must be a certified CDFI to receive the award.
Okay.
To apply and
receive the award. So if we partnered with a certified CDFI, then they would be the ones to get the business, not us, correct?
Correct. They're the ones that would receive the award. They're the ones that would be responsible for managing the award and responsible exactly for, managing the program.
Okay. Thank you. That answers my question.
Great. Thank you.
Next question from Dawn. Your line is open.
Thank you, Tanya and Joan. I have a question on Table 2C. There's a note that this is where the PG&M will pull from, basically from this. Is there anything that you can kind of clarify on what, if it's the entire table, if it's going to be parts of it, and kind of what would be, if numbers are met but dollar amounts aren't, or vice versa, what kind of the compliance aspect of it?
Sure. Thanks, Don, for your question. So the PG&M, the final PG&Ms will be set forth in your assistance agreement, and then they'll differ by recipient based on the projections that you provide in the application. So the PG&M will require recipients to expend the award on eligible uses and to close small dollar loans over a 3-year period.
Okay, but it's not going to also include, from that table, there's write-offs and recoveries, and if you don't hit those numbers. So it'll just be numbers and dollars.
Yeah, and the note, and we can add that to the FAQ, make sure it's clear. And then NOVA talks about what the PG&Ms will be. Again, it's to make sure the award is expended on eligible uses and that the recipient closes small dollar loans.
Okay, got it. I have one more question if I can.
Sure.
Okay, so for the TA side of it, if you were applying for staff, for example, some staff expenses to be covered, if your small dollar program goes up to $5,000, but the applicant's average is $2,000, and obviously they can, figure out which ones are under $2,500 and et cetera. But for TA, would they be allowed to apply for staff expense for a program that did have up to $5,000? Or how would that work? Would you need to prorate the staff expense or?
Okay. So the legislation is pretty explicit in how the awards can be used. And again, the awards can be used to support small dollar loan programs that are made to consumers that don't exceed $2,500. That's one of the criteria.
Yeah. So, and their average, the applicant's average is less than 2. It's like 1,950, I think, was the average. So that's the bulk of what their small dollar loan programs do. But they do, they could be up to 5.
They could be up to. You're saying the loans could be up to $5,000?
Yeah, but their current average is well below the 2,500. So if they were asking for TA for staff salaries to expand their small dollar loan program, is there a way that they can do that within, because obviously it's more of if that's possible to ask for TA for a program like that, they certainly can report they would have more than enough to show, projections were met under the 2,500, particularly given that the average size is less than 5.
Yeah. Again, I'm going to reference the legislation again. It's pretty clear how the awards can be used and the programs that our award will support. Let's follow up offline on this, and then we'll update the FAQ accordingly. I think I need to get a little bit more information to better understand your situation.
Okay, so maybe I can ask it a different way as well. So if they've got 3 small dollar loan programs, one would be the 25 and below, would they need to prorate the staff salary and the time that's spent on that versus a lender who might have 4 different functions? Would that staff expense need to be prorated for just the portion that's 25 and below?
Yeah, no, I understand your question. I want to give it a little bit more thought and talk to other team members, but we'll definitely follow up with you on that.
Okay. Thanks, Tanya.
Thank you. I see there's a question in the chat while we're waiting for others. If they have questions, I can. So the question is, if a FIDI that is also a CDFI partners with another CDFI, are they eligible to receive loan loss reserve funding? For example, a CDFI loan fund applying as the primary applicant in partnership with a CDFI credit union. So if I'm understanding your question, those that, and Joan, can you go to the slide that talks about the eligible uses? Go to slide 12, please. Yeah. Go one more, Joan. No, the other way. So while Joan is getting the title is Applicant Eligibility by Award Type. So for the loan loss reserve grants, if again, the eligible applicant types are those that are applying individually as certified CDFI. Joan will be the next slide. Or partnership between a certified CDFI, which would be a FIDI, and a FIDI. So the key here is that it would need to be a certified CDFI with a FIDI for this type of an award. And Megan, I see you asked that question. If you have follow-up or follow-up questions, please let me know. Okay, I see a couple of more questions in the chat from Victoria. The question is a clarifying question on the type of loan eligible through this program. Are small business loans an eligible loan type or only consumer loans? So again, referencing the statute, the loans must be made to consumers that meet these statutory requirements as stated. Joan, if you can go to slide, if you go to the program eligibility slide, please. So that we can look at that, please. Yes, okay. So again, referencing the statute, so the loans must be made to, our award will support programs that make loans to consumers that meet this criteria. And again, if there's a follow-up question, please let me know. If I didn't answer your question, please let me know. Okay, great. Thanks, Vicki. And Megan, I see you have a follow-up question. Does any FIDI encompass FIDIs that are also CDFIs? Yes. Operator, we have someone who wants to ask a question via the phone and not through the chat. How would she do that again?
Certainly. Once again, *1 at this time for your questions. We do have a few that didn't provide their name. Let me open their line one moment, please.
Okay.
If you've queued up for a question, your line is open at this time. You may ask your question. And we're getting no response with that one. We'll try one more here. Stand by.
And, okay, while that's happening, let me clarify a point I just made about Megan's question regarding the FIDI. I just want to make it clear that only the applicant that is receiving, only the applicant can receive the funding for the award. So if it's a partnership, if it's a certified CDFI and a FIDI applying for loan loss reserves, only the certified CDFI will receive the award and will be responsible for managing the award, not the FIDI. I just want to make sure that that's clear. Any other questions?
Once again, *1 for phone questions. One moment, please. We have a question from Gigi. Your line is open.
Hello, thank you. I came in a little bit late. Sorry for that. Can you just briefly summarize what this award is for? Who is it for, and who is eligible? Thank you.
Sure. So if you're looking at your screen now, this actually is perfect because this talks about applicant eligibility. So the statute allows for three types of applicants. Again, certified CDFIs applying individually, or partnerships between a certified CDFI and any federally insured depository institution, or partnerships between two or more certified CDFIs. Joan, if you can go back a couple of slides to talk about the statutory requirements. Okay, and so our award will be used to support new or existing small dollar loan programs that offer loans to consumers that meet the criteria listed here. And when we were just speaking, I'm not quite sure when you joined us, but we were just speaking about how the statute further describes the eligible uses of the awards by applicant type. So, for example, so the award can be used for loan loss reserves. Thank you, Joan. As stated here, to defray the cost of starting a new small dollar loan program or expanding an existing program, or for technical assistance, for technology, staff support, and other costs associated with a small dollar loan program. The loans cannot be used to provide direct loans to consumers. Just want to make sure that that's clear.
I don't know if you can hear me or not, but is this for like credit unions, small financial institutions, and that to provide these small dollar loans to consumers? And I'm on my phone, so I can't see the PowerPoint. I'm sorry.
Oh, no, okay, no worries. It's certified CDFIs are eligible to receive these awards. So if you are a certified CDFI, you can apply to receive an award.
I'm sorry, I guess I'm asking, what is a CDFI, a certified CDFI?
Okay. A community development financial institution. It is a financial intermediary that provides financial and technical assistance to people in their communities for small dollar loans, for affordable housing loans, for business loans, et cetera. I encourage you to go to our web.
Oh, okay. I'm sorry.
Yeah, I encourage you to go to our website, which provides more information about CDFIs, who they are, what they do, the mission-oriented intermediaries or organizations.
Quick question: Can it be a CBO, a community-based organization, or like a social services agency that provides those services? That can provide those services?
Generally, they're financial intermediaries. They're lenders.
I see. Okay.
Yeah. Again, I strongly encourage you to go to our website. Really good information there that talks about CDFIs, who they are, and what they do.
Okay, thank you.
Thank you. Vicki, were you able to open the phone line?
I was. Hi, can you hear me?
I can, yes.
Oh, excellent. Thank you. So I have a question about partnerships with a big P or a little p. I'm working with a CDFI that wants to apply by itself, and it offers loans. And it has historically provided its financial coaching as a CDFI through its parent. Its parent also happens to be a CDFI. Can the one CDFI apply by itself for both loan loss reserve or TA and still have a partnership with a small p, so not applying as a partnership with its parent to provide the financial coaching, and also with other partners like banks and others in the community for pipeline, or does it have to apply in partnership?
It does not have to apply in partnership. But I just want to make it clear that the other partners, the small P's, are not also applying for an award.
Correct. Right.
Okay.
Only one affiliate would apply. Correct. But we just wanted to know, since they both happen to be CDFIs, and one does the financial coaching, and the other one does would like to apply for both loan loss and NTA, so they don't want to apply in partnership. They want to apply by itself, but still use the financial coaching activities of its parent.
Yeah. Yes. Exactly. You're right. You got that right, Vicki.
Excellent. Thanks for your help.
Thank you. I see there's a question in the chat room from Karen. Let me just read this. Just want to follow up on the small dollar loan program issue. I think there are probably a lot of programs out there that offer microloans, but that may have a ceiling higher than $2,500. So it sounds like those programs are not eligible unless they create or already have an entire program just focused on loans of $2,500 or less. This sounds like it could be somewhat burdensome for CDFIs with small staff to create an entirely separate program. Good questions, Karen. As I've been stating before, the statute is pretty clear on what our awards will support. But we will create an FAQ for this. And actually, we've gotten similar questions. We've gotten similar questions like your question that we'll do some further research into. I see another question from Holly. If you receive less than the amount applied for, will your PG&M be reduced based upon the amount received? Yes, it will. We'll make adjustments, Holly. Another question from Holly. If you are planning to expand an existing small dollar loan program, do your projections have to exceed your historic activity, or does your historic activity establish a benchmark? We want to see a growth and expansion in your lending. We're not going to obviously tell you how that should be done, because it should be based on what's prudent, what's in line with your strategic goals and your capacity, et cetera. But we do expect to see an increase in activity. Any other questions? We've got 2 minutes left for this call.
We do have one on the phone from Vanessa, if you'd like to take that.
Sure, yes. Then I'll get to the one in the chat room.
And Vanessa, your line's open.
Hi. My question is, how does the small dollar loan program, if an institution were to get the grant, how does that those grant funds interact with the other CDFI grant funds like the RRP, let's say CDFI FA grant funds? How would all of those interact with the SDL program?
Sure. So I just want to make sure I'm understanding your question. So,
for example, with the RRP grant, if an institution is applying for the RRP funds as well as CDFI FA, the FA grant, you can't, when it comes to reporting, you can't kind of double dip, in information that you're submitting for compliance purposes for the RRP. You can't submit that, you can't double dip that same information when you're reporting for the FA grant. Is this the same for the SDL program? Like those loans, as part of that program, have to be separated and can't be counted towards other benchmarks or other types of CDFI grants?
That's correct. That's correct. Yeah. So right. So you can apply for this program, receive a grant in conjunction with having awards from our other programs, unless the other programs prohibit such activity. But yeah, right. You can't double count activity across the programs.
Okay. Thank you.
Thank you. Okay, so let me jump to the chat. I see that there's a question from Sarah. In the NOFA, it states that SDL programs must have payments that are reported to at least one consumer reporting agency. If our CDFI does not have the ability to report yet, are we ineligible to apply? Can we gain this ability after award?
Let's get started. Drive safely.
Hello, it sounds like we've lost Tanya, I believe.
Tanya, this is the upper. She's connected. Tanya, you may be muted. We do have you still connected on the conference.
This is Julie. We may just be having a connection issue. Tanya, speak up if you can hear. But I think we're past our time, and we've gotten really great questions. And there's a few in the chat that we will follow up with you on. if you had a question in the line, I definitely encourage you to reach out either an AMIS service request or the help email address for the small dollar loan program. One last check for Tanya.
Oh,
go.
Hey, Julie?
Yes. I think we lost you for a second there, Tanya.
Okay, that's what I thought. I'm like, what happened? I didn't hear anything. Okay.
I was just sharing just how to submit questions after the fact, and we will follow up with the ones that are still remaining in the chat separately.
Okay, great. Hey, Julie.
Yes.
So the call is over.
Is the line still open, or operator? Is the line still open?
Thank you. At this time, today's conference has ended. If you'll please disconnect at this time, have a great day.